U.S. China trade talks are set to resume next month. But for a look at the impact of trade tensions on the tech sector, let's welcome journalist Rebecca Fannin. She's the author of the new book called Tech Titans of China, which came out this week. Also, we're joined by Wedbush Securities Managing Director Dan Ives. Thank you both for being here. Rebecca, let's start with you because of the book. Your basic underlying premise is that if tensions don't reduce soon, you think China is actually going to outpace the United States when it comes to technology development. Why is that?
We are seeing this. U.S. China tech Cold War is happening right now. And the U.S. has a major challenger in China, a global challenger. China has come up so rapidly over the past decade, innovating very fast, working very hard, going global. These are all aspects of China's tech economy that could never have been imagined a decade ago.
I know AI is where most people point. They say in terms of artificial intelligence, China is ahead in some aspects. Partly that's because they're spending a lot of government funding. It's going through universities. Partly it's because they have big databases of lots of people that they can kind of work with and run those things too. But there have been serious security issues that have been raised with Huawei and with other cooperative efforts. Do you think that those are fallacies? Do you think it's not a problem?
Well, there are a number of AI startups, and many of them are unicorns already. So we do see this incredible push that China is making in AI. Facial recognition is part of AI. So that is an issue that has become a very controversial issue. And when you go to China, you see cameras everywhere looking at you and recording everything you do and monitoring the citizens.
Is it hyperbole or overstating to say that the innovation you're talking about, if I ask a question, did they innovate or did they steal what we innovated? Is that oversimplifying things, or is there something to that?
I think it's oversimplifying.
It is.
If you look at the history.
So they've innovated themselves. So we don't need.
If you look at the history, China came to the U.S., went to our finest schools, went to our finest companies, went back to China, copied. But now China's progressed to the level that they're innovating on their own, originating.
But is there a problem with IT theft or not?
I think there obviously is.
There is, but it's overstated.
But I think it's overstated.
Hey, Dan, let's just talk a little bit about what we've seen in the last few days. As it looks like maybe the talks will resume next month, it certainly has been technology leading the way higher. I mean, they're on the forefront of any issues that we deal with trade right now. What would you tell investors when they start looking at this sector?
Yeah, it's the biggest black cloud across tech sector, no doubt, and especially semis and Apple front and center. Apple continues to be the poster child for the U.S. China trade war. And I think it comes down to worries about disruption of the supply chain, what that's going to do to growth. I can tell you so far, I think bark's worse than the bite, but no doubt, if I look at, let's say, an Apple, there's a $20 to $25 overhang on the stock because of the U.S. China trade situation. So that's why from a tech investor perspective, we continue to handhold through this focus on the long term, but ultimately near term, it ultimately does ride on tariffs, because if the tariffs kick in December 15th, that could take about 200 bips off of tech growth.
Wow. So again, what would you tell people to do?
Well, I mean, right now we're buyers of tech. We've been pounding the table on Apple. Semis, we're buyers here. We continue to think right now fundamentally and valuation-wise these stocks move higher. You know, and to your point, I think it comes down to, you know, right now this is really a game of high-stakes poker between U.S. and China. What I continue to hear from my tech CEOs is, you know, kind of what Joe said on IP, because it really does come down to protection of IP, and that's why right now everyone's trying to see, is there going to be teeth in what the
battle? Do you think that that there's a possibility that we could ever reach a deal in which case U.S. companies that are based in China now or manufacturing using their supply chain in China are not going to still think about leaving?
Because right now the issue is they're going to still think about leaving because what's going on.
Irrespective of what deal gets done, or no? That's what I'm curious about. Because if you're for the Chinese government, one of the things you want is things to remain the same. And so what do they have to do on that end?
If a deal gets done that ultimately U.S. companies feel comfortable, let's say like an Apple, for example, best case, they can move 5 to 7% of production out of China in 18 months. They're kind of landlocked right now in terms of in China. But I do think when you look at other tech companies, for them to move to China and have more operations, it's going to take more IP and more ultimately teeth in terms of, you know, what this deal could potentially be.